I'm Paige Deers. I'm here at the NBA conference speaking with experts. I'm here with Jere Lucey. Jere, let's talk about the note sale market. Very active in 2011. Where did it finish and what do you see for 2012?
2011 finished by having a market that was not just a cash market where it started in 2011, but being a market where buyers could finance their purchases. There were a couple of very, very large pooled transactions in the third quarter of the year. And the fourth quarter of the year saw a lot of single asset transactions. In the beginning of 2012, we expect to see a number of pooled transactions again. We spent the last quarter of 2011 pricing a significant number of loans. Many of those loans were anticipated to be sold as pools, and pools of not just non-performing loans, but performing loans.
So you're seeing more things come out to the market in large form, which is a good thing. Mm-hmm. What are the motivations of these sellers? And who are they and why are they putting this stuff on the market?
The sellers are, there are a lot of different types of sellers, but if there was one large theme, it's domestic banks and foreign banks. And if there was a theme for the domestic banks, it's that they have classified these loans as troubled debt restructurings and taken cash flow from the loans to lower their book value of those loans, and market value now is at or slightly exceeds that book value. Therefore, they have the ability to sell these positions accretively. And for foreign banks, there are a number of foreign banks that we've sold for, but many of the foreign banks are banks that have elected not to come back to the U.S. So they are just simply selling the inventory of loans that they own in the U.S., and they're timing their sales to try to take advantage of market opportunities.
So if you can get better, stronger pricing, that means more investors are probably going to be looking at this, and it means that they're going to see more investors. Who are the people buying these assets?
Well, you're going to certainly see more sellers, and those sellers are going to be attracted by prices that investors are paying. The investors have been substantially funds that have tried to raise capital to take advantage of something that is called distress. And those funds have had trouble finding real distressed opportunities in things like corporate distress. So it's migrated to real estate, where they feel that they can buy assets, buy loans at values which are asset values in an environment where asset values are perceived as being lower.
So lastly, Jere, note sales was not something that has been a huge hot fire catch on, but now we think this is going to be a segment of the market that will continue. We'll continue seeing note sales in the market?
Yes. Yeah, we think that it's not just a distressed market anymore. It's a market where there are performing notes that are being sold at relatively attractive yields for sellers, but also yields where buyers can buy on a leveraged basis and generate outsized returns for their funds.
So we'll see more in 2012.
So we'll see more in 2012.
Okay. Thanks for joining.
Thank you.